Good weekend, all. Ira Epstein of Linn & Associates with your weekend edition of your SPDR ETF wrap-up. And this wrap-up is for Friday, the 16th of April, 2021. Well, normally I'd be saying, well, we're through with the tax season, but we're not. We have another several weeks before that comes to an end, so let's see what happens. I think it's May 17th, but I'm not sure. As you can see in the marketplace, what we've got going on is GameStop down a little bit again. The market did hit, though, the 130s this week, so it's come back nicely. I don't know why I'm missing a quote there. All of the stocks were up, but it's after hours. I'm doing this after 7 o'clock at night on Friday, so it could be any host of things. When I look at the uranium weekly chart, you were in a downtrend that has now found its legs against the 18-week average. At the moment, you have higher lows. You don't have higher highs, or do you? You actually do. You have an outside day today, actually an outside week that took out 1957. To know you're embarking on another leg down, you've got to take out this week's low of 1907. That would give me a target of the 1800. If the market holds here, you could be headed back into this level. That's how the weekly chart is set up. Momentum is still pointing down, but it's starting to arc sideways. I think this will be an important week, is basically the thing to say. When I look at the tech sector, it's a new high. So remember what this is. You know, what are we looking at here? We're basically looking at the big boy tech stocks. And in that, they have come back alive. They're doing very well. You can see how this market is moving in that. You got the higher lows, higher highs. However, you've hit an upside target, your Bollinger Band. You hit it last week. And last week, if we take a look at this, you were over it. You stayed over it this week. It is a breakout. On a weekly chart, I look at charts and I say, we're in the, if you settle 2 times in a row outside of the Bollinger Band, and each week is higher than the prior week, and you're closing in the top quadrant, I'll label it a breakout until these lows here are taken out. That does not mean that I would tell my clientele buy over a Bollinger Band. I would never do that. And in fact, I've put together a whole course, an enhanced Bollinger Band course. So if you know Bollinger Bands, I'll take you to what I call the doctorate level on it, okay? Master's degree, doctorate, whatever you want to call it. I'm going to take you to another level. I talk about it at the end of this because they're so important. I mean, when I look at a chart, if you were to tell me the one thing I look for resistance and support, one thing, Bollinger Bands. So I see the market there. It's over it. It's ahead of itself. What about momentum? Overbought, not embedded, where you've locked in like you did here, and that often accompanies a drive in prices. I'm not bearish, but I have reasons to say, okay, on pullbacks, I want to get interested in the market. PAVE, I've kept this on for a reason. I don't see how, with the Biden campaign talking all this infrastructure, this market's not just one of those that you want to keep your eye on. How's that? I don't make trade recommendations here. You know that. I talk what I think the pros are doing. I make all my recommendations in my morning subscription video. That's where you'll find them. But to say that I've been consistently bullish is an understatement. It's offered the opportunities in, keeps driving up to the upper Bollinger Band with an embedded reading. It just continues on that path. XLI, the industrial sector, just take a look. It's a classic bull market. And what's classic is the market has locked in on the upper Bollinger Band. I call that the gorilla glue trade because it's the strongest glue. That's what I think it is. You know, not industrial strength, but I imagine they make one too. And it's just locked in on it. It's not like the old Elmer glue, heated up and I can break it apart. Nah, this isn't going to happen with that Elmer, with Gorilla Glue. I use it on a lot of things. I am handy, believe it or not. On XLE, the energy sector, momentum turned down a while ago. And we can talk about that right here because right this week, right here, the red line watch, this the next week that it happens, got under 78. So that was the week of April 1st. So we're now at the 16th. And watch what happened as that occurred. So you can see the market's been slipping back. The 100-week average is a good support zone. Between there and the 18 is where I'm looking for the overall support. To say the market's corrected enough, well, on Price action, you have to get back over 50.33. Momentum action, no, even doing that won't do it. You need to either correct it and bet it again. So no, they're going to fight each other. On SPY, another one where you've locked in and away you're going. Embedded reading, new all-time highs, up for the week another percent. Last week, just so you know, last week you're up 2.7, so that's a 4% gain. This week you were up, right, I'm going back here, 5.25% roughly, and this week up 6. So you've got a 1.6%. So you have overall 8-9% gain just in the last 4 or 5 weeks. It's been week after week to the upside over the upper Bollinger Band. It's ripe for a correction. Okay, that doesn't mean the trend is changing. It's ripe to get back to the right-hand side of the Bollinger Band. I don't see anything on this chart other than getting back under 383.90 that would make me nervous about the market. That's quite a ways off. It's $30 away. On SPF, and SPY with the momentum, I'm sorry. SPY with the Bollinger Band, fully embedded. So I still am friendly this market. Emerging markets, new high this week. You made your move. Now, what's helped this chart come alive was suddenly, and I'll take you back right through here. This was March 26. Go back to your interest rate scenarios and see when you started peaking out and then they started turning down on that 10-year note. This came alive with it. Why? Because the dollar started pulling back as well. So dollar down, interest rate pulling back, this market comes alive at the same time. In the gold market, so far, this is a contra-trend rally. You've ended this wave to the downside. That I will say as a chartist. But you need to get up and close over these numbers to get bullish. And even if you do, it's going to take me a longer time than you think to join on a weekly chart the bull camp. Why? So let's assume you close over 168.30. You'd have to have a stop under the most recent low to break the chart pattern. That's bothersome to me. I see momentum's up and all that. I'm looking for that to be the resistance point, and then I'd like to see a churning action for a little bit. In the gold miners, I'm friendlier to miners than I am gold. And I've said that in my morning subscriber video. This chart last week, not this week, turned bullish. You had higher lows, higher highs, you closed over that. So momentum up, bias up, trend up. Target, if it can keep going, you never know, 37.35, support 34.31. I don't want to see 31.65 taken out. It's a lot of difference between the chart before it, this GLD, that if you got over 168.29, risking $11. Versus risking, as you can see, 3 on this chart. This is a much better looking chart. SLV, this is where the game begins. You've now rallied back to that 18-week average of closes. From there is often where charts decide what the next moves are going to be. You've recently gone up through the upper Bollinger Band. It took 2 months or so. You came down to the lower band. You've gone back to what I call the line in the sand. Getting over 24.63 would be an excellent sign that this leg to the downside is over. It is not over in my book as a chartist until that occurs. You could easily turn this red line back down very, very easily. So I don't have an opinion there that it's made the turn. Where the TLT found its legs was against the 200-day average of closes and the combination of the Bollinger Band. And then we got a pattern that, if you look at this week, you got over that high. That was the number that now you've broken that pattern. That doesn't mean you can't work to reestablish a bearish pattern. Why am I saying bearish? Because you're still under the 18-week average of closes. But you do have what? You've lost the embedded reading. To get the market bearish, a way to look at it, any reading next week at under 20, names under 20, is an excellent sign that this was just noise in the market, it's coming down. Without that, then until you break through this area, the odds favor you're going to try to work back to that 145.59 is a contra-trend rally. When we get to the FXE, you got up this week to 112.33, so you've double topped the market right here, which is interesting. Momentum turned back to the upside. The bias is down. Trend is down. What stopped the decline? The Bollinger Band and the 200-week average with it. When that came together, the market just came back. Has it thrown out buy signals on this chart? Absolutely not. Has it thrown out a signal to be out of shorts? Yeah, that happened when you started losing the embedded reading, okay? And you started off, you were there, and early in the week you had lost it. So that I can see. The question is, are you going to reestablish them? Jets. You know what's been going on in jets? They're hearing from the government that maybe that center seat should be empty again. They've done aerosol studies in the 2008 area that proves it. So momentum is faded here. The market's having trouble at the combination of the 200-day and the Bollinger Band. I'm going to repeat that Bollinger Band again. And if the market breaks down, 2453 area. We all hear airfares are going up. The bookings are going crazy. If you haven't done it, then you're not looking at the news. So what stopped the market? I'm giving you the idea. What if you all of a sudden say, hey, I want to take out 20% of your seating on a plane? That certainly impacts everything. So that's what you're dealing with. The sign that they've gotten beyond that would be getting over this 2905 area and turning that momentum and having a point back up. Last, this is the ag fund. So this is when you're looking at the grain markets. And in the grain markets, it's a bullish scenario there. World grains are in high demand. China's expanding. They're really now bringing back their hog herds. They're going to need feed. They're taking a lot of the corn land. They're throwing it for other things. They are not self-sufficient in soybeans or corn. They're willing to be buying in the open market. And for that reason, you've taken corn up to $6. You do realize we gave the farmers just year and a half, 2 years ago, all this relief when prices were 3.5 and 4. Now you're at 6. The one thing a farmer doesn't need is help from us, right? He doesn't. He's got plenty. All he's got to do is manage his business at this point. So with that, if you want to learn more about Bollinger Bands, take a look at this. I'm Ira Epstein. Have a great weekend, and I will see you all come Monday. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.